In the next 3 months, your financial future could be determined. Most people will overlook the biggest wealth change of our generation, even though it is right in front of us. Those with a solid understanding of the actual liquidity situation, the Fed, the Treasury, and international markets, will hold total power while the rest of the world looks at the headlines. This applies to all digital assets, including XRP, Bitcoin, Ethereum, and others. In this instance, whether this is happening right now is not the question. It's happening right now, and you'll be left out in the cold watching. Unless you understand the forces at play, you will not benefit from history as it unfolds. This is not an advice for your money. This is the truth. The Treasury has been taking money out of circulation since July 16th in order to merely reload the Treasury General account. Through the issuing of bonds, they have extracted approximately $500 billion. The economy lost $500 billion in a matter of months. Because of this, riskier assets like tech stocks, cryptocurrencies, and high-growth plays have not been operating as anticipated. They've been choppy and careless. What matters most is that withdrawal must stop. The entire dynamic will change once the liquidity drain is over and money starts to return to the Treasury's account. This one macro variable is mostly to blame. Right now, I must tell you something really important. By the way, I created the XRP Millionaire Blueprint for people who want to be ahead of the curve and discover how to use all of this to build long-term wealth. Generations. Numerous documents, films, infographics, and other materials offer a methodical analysis of the subject matter. It is organized so that the connections and opportunities are easily understood. The link may be found in the pinned comment below the video. You should definitely check it out because the time couldn't be better. Now let's explore further. Global liquidity is currently growing at a rate of about 8% per year. When you factor in the average inflation rate of 3%, the true depreciation of your currency is about 11% annually. Give that some thought. Your buying power decreases by 11% a year if you keep all of your money in a savings account. Because of this, successful investors take what seem to be long-term, reckless bets in assets with exponential growth potential, technology, and cryptocurrencies. Being frugal with your money is not the point of the game. Disobeying a system that is purposefully designed to punish savers is the game's objective. This is actually the main purpose of Bitcoin. That's what XRP, Ethereum, and the other big networks are all about. They can assist you in keeping up with the deterioration. The fact that this liquidity is more than just a theoretical idea only serves to increase its power. This accounts for 90% of the variation in Bitcoin's price. It accounts for between 95% and 96% of the Nasdaq's performance. Let that sink in. 96% of tech, 90% of cryptocurrency. Stocks. The motivating element underlying all of this is liquidity. Is that all? On a graph, no obvious pattern appears. Make use of these headlines to divert attention. You won't have to worry about following every story if you get this one thing straight. Accept the current as it comes. What is happening now then? Since July, global liquidity has slightly declined year over year. In fact, how did the markets respond? They became fewer in number. However, it's just the beginning because there is no longer a need to continuously withdraw liquidity now that the Treasury General account has been restocked. This is the pivotal moment. This indicates that we are about to reach what Raoul refers to as the acceleration phase. At that point, risk assets soar higher and liquidity isn't just increasing. It's compounding 10 to 15% annually. This is nothing new to you. When liquidity increased in 2013, Bitcoin skyrocketed. The worldwide rebound and easy money in 2017 led to Ethereum and XRP's spectacular runs. With stimulus checks and zero interest rates in 2021, the cryptocurrency market as a whole reached all-time highs. The story is the same in every cycle. The fuel is liquidity. The engine is cryptocurrency. And history is created when the two come together. The weird part comes next. Despite a minor decline in liquidity, the Nasdaq has continued to perform exceptionally well. Why? Due to technology. On the tide of AI and technology, stocks are soaking up enormous global capital flows from institutions and overseas investors. Bitcoin, however, is lagging a little. We've seen this exact arrangement previously, and it's been careless, consolidating, and rectifying. Bitcoin, via the Nasdaq, always performs this dance after a breakout. Combine, perform poorly for a while, then soar higher and leave everything behind. Because of this, some cryptocurrency hedge funds are even suggesting that we should stick to investing in IT stocks. And that's precisely when cryptocurrency regains the upper hand. Take a look at the 2022 present chart. Bitcoin has consistently performed better than the Nasdaq. That's what it does. It does just that, every time it reaches the same zone. More precisely, the 2 standard deviation line. It advances. It gets ready for the big outperformance that follows. We've returned to our starting point. This is encouraging for both Bitcoin's imminent comeback to the top and altcoins like XRP, who are setting themselves up for even bigger success. Think about it. The consolidation of XRP has been under tremendous pressure due to years of legal uncertainty. The storm cloud is no longer there. There is a transfer of funds. There, institutions are moving. Payment rails are rising everywhere you look. Furthermore, when marginal capital returns to the cryptocurrency market, XRP does more than just track Bitcoin. I can move it more quickly. In addition to the network impact, there is the adoption angle in the actual world. For this reason, you must pay close attention right now. Remember that the next 3 days, or maybe the next 3 weeks, don't matter. You will lose if you don't think about that. As we go into the acceleration phase of global liquidity, we are concentrating on positioning for the next 3 months and beyond. This implies that until someone steps in to remove that liquidity, asset prices, stock prices, cryptocurrency prices, and everything else will continue to rise. Up till then is the simplest route. The S&P 500's current performance is strikingly comparable to that of the tech boom of the 1990s. Even though it ended in 2001, it was in charge of some of the most extraordinary profits ever recorded. The history of artificial intelligence now is similar to that of the internet in the past. Each flow is the same. The mindset of investors is the same. The wealth of everyone else abruptly multiplied, leaving just cash for those who questioned or asserted that it was over. This is the moment to determine whether you want to be the one who recognizes the setup and takes appropriate action. Because opportunity won't wait for you. You can be the person who 6 months later says, I knew it, but I didn't do anything. If you are uncertain, it doesn't matter to money. It benefits those in a good position and flows freely. So, we're going back to XRP. Even if Bitcoin is currently the market leader, XRP is well positioned to benefit greatly when investors reinvest in other cryptocurrencies. A remarkable acceleration phase is the result of all indications, correlations, consolidation, and structural arrangement. The majority of investors are unaware that liquidity is the cornerstone of the entire market system, which includes bonds, stocks, cryptocurrencies, and even real estate.